Silver has made a firm breakout over $37 an ounce. In the last 6 months, I've gotten to meet and know Mike Maloney pretty well, who is one of the largest precious metals YouTube presences on YouTube. And Mike has just recently presented his theory that silver has gone into slingshot mode, where it will dramatically outperform gold, and this breakout over 37 is the start of that slingshot. I'm not so sure we're ready yet, which is why we're calling this update Slingshot or Not. I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. If we can help you with any of your physical precious metals needs, we'd love to have that opportunity. In this update, I want to discuss with you the massive cup and handle formation that's formed in the silver market, which is the basis for Mike's thesis, how silver continues to remain undervalued relative to gold. We'll look at the two previous slingshot moves higher this century. We'll look at silver's upward trend line since 2022, which is pertinent, but even more pertinent are today's current market conditions, which we'll get to at the end of this update. So here is the silver chart that takes us back to 2003, where you can see the big run up to the great financial crisis to $48, the big correction, which formed the cup, the run up to $30 when COVID hit, and the ensuing handle that has now formed with the top of the cup at $30 and the breakout that we've been seeing over the last year or two. Now, the thesis for the cup and handle formation is this: the difference between the bottom of the cup and the top of the cup. When the metal breaks out, silver will move, or any market will move that much higher. So the difference between the top at $30 and the bottom at $12 is $18. If you add 18 to 30, you get the $48 mark that's indicated by that blue arrow. And that equals the previous market high of 48.60. So the cup and handle theory suggests that silver could get to $48, and we've already been as high as $39.30, actually a hair higher in the current market. So that is the basis of the cup and handle formation, and that is why this breakout over 37 is why Mike thinks the slingshot has begun. Here's the same chart that shows with the ellipses the last two big slingshot moves silver has made. During the great financial crisis, it went from about $18 to $48.60, up about 150%. And then from COVID, when COVID hit, we went from about $14 to $30 an ounce, or 100% gain. So those are two big, really sharp moves higher. And we could be seeing just the beginning of that move higher now, with the breakout over $37 an ounce. Let's drill down a little tighter. This is the same chart I used in the silver needs to get over $37 an ounce to break out, but it's updated to today's pricing, of course. And you can see that kind of no man's land between basically $35 an ounce and $37 an ounce that the two previous upside resistance levels made, that silver has crossed through and now broken over. So that technically the next upside resistance point is at 43.70, but we've got a clear breakout over $37 an ounce. So this takes us back to 2009. Let's tighten this up a bit, shave 10 years off of it. And this takes us back to 2019, where you can see the COVID move higher, much more well-defined. And then the sideways move that we've seen since, and then the grind higher that silver has gone through from about $22 an ounce to $39 an ounce as of 2 days ago over the last 2 years, while gold has gone from $2,100 to $3,400 an ounce. So gold has been driving silver higher in a grinding fashion, and now we've got a nice breakout over the latest upside resistance point at $37 an ounce. Now let's take this back to 2022 and drill down just a little bit further. It makes these moves look a little less dramatic, but still you can see how silver crossed over 35, bounced up against 37 for a couple of weeks, and now we've punched higher in a clear classic breakout after setting a really big base for the last 2 years of a 2 steps forward, 1 step back market. If we put a trend line on this, you can see that silver has just crossed over into true breakout mode compared to its trend line for the last couple of years. And in today's price action, silver is down about 80 cents. It's actually back down to just under the top blue trend line. So it's back into trend barely right now. This is a COMEX silver chart that goes back 6 months. And I've used this in the past for silver to show you where I had support before, which is the bottom red line that goes from lower left to upper right with the 2 circles on it. When I drew that line way back in March before the April breakdown due to Liberation Day, what I did was I just connected those 2 bottom points, and then the Thinkorswim platform that I use, you can extend the trend line to infinity towards the right. And that's what I've done. I did that back in March. We went under that, and then we've crossed back over it. So silver remains back in support. And I've done the same thing on the upside now too, taken those 2 higher points, connected the dots, and then extended into infinity to the right. And silver, again, it's testing the upside of this 6-month trend line, but really not in a firm breakout yet. So here is the same chart with a daily candlestick. And there we've got a drill down on the resistance points and the move higher. And that breakout higher, that really sharp single candlestick higher, the catalyst for that was the July 9th announcement that we would tariff Mexico and Canada between 30 and 35%. And we get the majority of our silver imported from these 2 countries. So there's been some renewed tariff fears that may affect the precious metals sector, which are becoming material again. And that's what the catalyst is that led to that silver breakout. That big breakout over $37 an ounce has taken us as high as $39.53 as of a couple days ago. And I've drawn in with that red dotted line today's downward correction that we're seeing, some Friday profit taking, getting silver back into range. So silver is still within the trend lines. So let's take a look about what's been going on with the warehouse stocks. As you can see, we had a big run up in warehouse stocks going into April, the biggest gain in COMEX warehouse silver stocks ever. This chart goes back to 1993. At the peak, we were at about 505 million ounces of silver in the COMEX warehouses. Today, we're at 498 million ounces. So we're down a little bit. And you can see the COVID peak and then the pre-reciprocal tariff day, Liberation Day peak in April, which is about 505 million. But if you look all the way off to the right, just barely, we're starting to see warehouse stocks increase again. They've been holding pretty steady. So that's a sign that there is some renewed fears over tariffs. The premium for silver in New York is high enough where it's drawing some more physical silver in from around the world. And we've talked about that before. So the market is betting that we could get some some tariffs on silver. And if we do, the silver that's already here will theoretically become worth more, which is what this whole big draw of silver into the COMEX warehouses has been all about, front-running tariffs. Now, if you look at gold, this is the same 5-year chart for gold COMEX warehouse stocks. Now, gold stocks got a little over 45 million ounces, and we've drawn down that much more considerably in the past couple of months from the peak. But now we're seeing a similar uptick in gold warehouse stocks in the COMEX exchange, again, pointing to tariff concerns and a premium in New York over what could happen when August 1st actually comes around now, because that's That's the next latest tariff deadline. We'll see what happens. But tariff concerns have been driving the metals prices higher and have been driving premiums higher in New York, which have been drawing metal back into both the gold and silver warehouses for the COMEX. So this is the gold to silver ratio chart that goes back 25 years. Today, the ratio is about 87.2 to 1, and it's narrowed sharply from the recent peak of 104.91 to 1. Just a month ago, it was 92 to 1. So silver has been playing catch up relative to gold. Now, what's interesting about the two previous big runs in silver from about 18 to 48 during the great financial crisis, when the ratio narrowed from about 72 down to 31 to 1, gold only moved from 1200 to 1535 at that point in time. Silver made that big run and peaked before gold got all the way to 1800. So silver ran hot late during that gold run, but it started to go through profit taking before gold peaked. And we saw the exact same thing happen during the COVID run. When silver ran from 14 to 29, gold ran from about 1500 to 1735. Silver peaked and held, sold off a little bit, but gold kept running all the way to 2069. So when both of these gold to silver ratios bottomed, silver stopped advancing in price and corrected a little bit while gold kept running. And that may be important for you to consider in the future when everything's red hot before the markets peak for silver and gold, if you're looking for a sell signal potentially for silver, if that's what you're considering doing. Silver may peak before gold does. And usually when these things happen, there's a lot to worry about. And that's the last thing you want to think about is selling. So that begs the question, where are we in the cycle now compared to where we were during the great financial crisis after we had the big run back up from COVID? So off to the upper right, that's where we are now basically with silver. Are we in the lower part of that last big run during the great financial crisis? Or are we a little higher up the chart at this point in time? I would argue that we're down here. We're still lower in the cycle. But that little correction between these two, has me wonder whether the corrections we've seen just recently are not similar. That's why I put this in here. But I really do think we're about here, the lower part, compared to where we were during the great financial crisis. So here are trend lines that I've drawn in on the 6-month silver candlestick chart. And you can see with today's price correction lower, drawn with that red dotted line in the very right top corner, silver is back into range today. So despite the breakout, when you look at the trend lines, a couple different ways, silver has really not broken out of its upward trend channel yet. So I think that's another reason why I think we're at the lower point of this breakout cycle, to be honest. And that gets me to current market conditions compared to the last two slingshot moves that we've seen. When silver ran hot from 18 to 48 during the great financial crisis and ran hot again from 14 to 30, basically, during the COVID meltdown, well, we don't have a crisis today. We don't have a lot of fear in the current market. We've had some concerns and some big ones. Tariff turmoil, a hot war between Iran and Israel, inflation maybe perking back up, but we don't have fear. And the last two times silver took off like a lightning bolt, it was because there was a lot of fear and a lot of turmoil and a lot of concern, much more than we have now. which draws me to my conclusion. Silver slingshot or not yet. I do think that silver will go through the slingshot move that Mike describes. I just don't think we're ready to see it yet, because the real major contributing factor, big economic concerns, have not arrived into the markets yet. That doesn't mean they won't come. We may have to wait a little while longer. So I think we're still in a grinding 2-step forward, 1-step back market where you want to buy the dips if you want to be in the market. And we just got an 80-cent sell-off today, which is a pretty good dip to buy. We may see a little bit more weakness. Stocks have peaked again, hitting new record highs. Bitcoin is high. Complacency prevails. So we may see some more sideways action. Take advantage of the dips when you get them. So slingshot, not quite yet. So that's our update. Thank you so much for your time today. If you like what we're doing, please subscribe to our channel. Thank you so much.